Hi there, Serial Trader here. I'm just going to do a brief introduction here to this Vvix tool for, it's basically an entry tool. And it's certainly not a standalone trading system, but combined with other forms of analysis, it certainly adds a nice edge to that. So I've just done the last, let's see here, 1, 2, 3, 4, 5 signals, legitimate signals that this has produced, and this is on the 30-minute bar charts for every one of these charts here. So I mean, you can certainly do a further look back window, and I've gone back and gone through 2017 and looked at a variety of data, and this is essentially pretty effective during various market conditions. It's fairly robust as a timing tool. So just to review here, we have the top chart is the Vix, so that's the volatility index, and that's essentially a total measurement using a certain formula of the implied volatility of SPX options. And of course, SPX is the S&P 500 index, which is made up of a market-weighted list of 500 stocks, market cap weighted. Not quite the same as the Dow, for instance, which is price weighted. Now, the second chart here is the Vvix, so it's the volatility index for the implied volatility of VIX options. So it's like the volatility of volatility. So VIX is a measurement, it's an index that is the result of a measurement of the implied volatility of SPX options, and Vvix is an index which is the measurement of implied volatility of VIX options. So it's a derivative of a derivative. So basically, when implied volatility increases on VIX options, that's displayed by Vvix moving higher, and then if it lowers, that's displayed by Vvix moving lower. And same with VIX. If the VIX is increasing in price, that means the implied volatility is rising on SPX options, and then if the VIX is decreasing, the implied volatility is going lower on SPX options. Now, as you can see fairly easily, SPX and these other two volatility indexes are essentially inversely correlated. So if SPX is going down, typically you see Vvix and VIX in an uptrend, and if SPX is going up, you typically see VIX and Vvix going down. Although there are occasionally times where that doesn't hold, but that's fairly temporarily for the most part. They typically are inversely correlated. So basically, the way the tool works is you look for, and we'll just start back at the left and work our way to the right. And at the very right of the chart is present day, and then way back here at the left where we're starting, looks like it was somewhere back in October, mid-October essentially. Okay, so what you're looking for is a divergence between VIX and Vvix. And again, it doesn't matter what kind of divergence. You could have VIX making higher highs while Vvix makes lower highs, or you could have the opposite. It doesn't matter which one is doing which, as long as they're doing the opposite or doing a divergence between one another. That's all you're looking for. You're not concerned with which one. As far as the actual directional implication, that's where these moving averages will come in. So here we have VIX making higher highs and higher lows, and here we have Vvix making lower highs and at least a couple times throughout this trend lower lows. Now again, we're not concerned with what each one is doing. We're just concerned that there's a divergence between them. And then right here, so you have had your divergence, as I've pointed out here in these two trend lines. And then what you're looking for is for Vvix to drop below its 55 period simple moving average, again on the 30-minute price charts. These are all 30-minute charts. That's how this works. And then after that, you're waiting for SPX to get above its 65 period simple moving average. So after you have your divergence, and after you get this one below, you're now waiting for SPX to cross above its 65 period, and then that's your confirmed buy signal. So here in this instance, if you'd taken that buy signal, it basically immediately went up, pulled back slightly below where you would have likely entered, and then continued on a fairly nice uptrend. Okay, so that was a legitimate buy signal. That was a a good trade, just using this completely by itself. And then it's not an exit tool. This is only for entries. You have to use some sort of other method for exiting, and that's just a total discretionary choice on your part. Now the next signal we got here is over here we had Vvix, we had Vix making higher lows. You see here, and then Vvix made lower lows. Okay, and then so you had the divergence, and then you had Vvix get above the 55 period simple moving average, and then you had SPX shortly after get below the 65 period simple moving average, and that was a nice sell signal. And as you can see, quite a nice downtrend, and it really didn't go against you much if you took the signal right when it crossed. It never actually tested your entry, and the downtrend went on quite nicely. Before finding support. So to me, the quality of the signal is better if you get the moving average cross at basically the same or a similar time between Vvix and SPX. It's just a lower quality signal in my opinion if one crosses but the other still hasn't yet. Although you can see it's still valid over here when it did that. Now moving on to the next signal. Here we had Vix make a higher high, and here we had Vvix make a lower high, and then Vvix crossed below its 55 period simple moving average, and then you had to wait a little bit here for SPX to confirm and get above the 65 period moving average. But after it did, you can see it really didn't go against that entry a whole lot, and actually just went up quite nicely in an uptrend. Okay, and then the next signal was here. You had Vix making higher lows, and then here you had Vvix making lower lows, and then after that you had Vvix get above the 55 simple moving average, and then almost at the exact same time you had SPX get below its 65, and that was a great sell signal, and you can see pretty significant downside, and the entry was never actually tested. If you use a stop just above your entry, it never got tested, and we trended down quite nicely. And now most recently you had this divergence where Vvix was making higher lows and Vix was making lower lows, and then as soon as you got above the 55 period average on Vvix, at roughly the same time you got below the 65 period average on SPX, and that's been a nice sell-off since that started. So we're currently on a sell signal here, and obviously the expectation is for SPX to go lower based on other analysis, but this is just a nice glimpse as to this tool and how it works, and it's actually pretty consistent. Now, does every single signal that it produces lead to a profitable entry, or I should say a good entry in a profitable trade? No, it's not a perfect system. If you go back and look at a few dozen of these signals, or maybe even 100 plus of these signals, there are definitely instances where you get a signal that doesn't really work out. But that's obviously where you need to manage your trade, and you have to use a stop, and if it's not working, you just get out. But definitely more often than not, this signal produces a good entry for either a buy or a sell. And certainly combined with all the other analysis you can do, it's a very nice complementary tool. It's not even a bad tool if you used it explicitly just by itself and just had good risk management around those entries. But certainly a very powerful complementary tool to everything else we can do with this market. So I just thought I'd give a brief glimpse into this. You can do what you want with it. Again, if you want to set this up for yourself, you're using a 30-minute bar chart for each one of these underlines, and then of course You can make this, you can have SPX on top, in the middle, whatever you want. This is just the way I've set mine up. But I got SPX on the bottom, Vvix in the middle, VIX on top. And then the Vvix has a 55 period simple moving average, and the SPX has a 65 period simple moving average. I don't have a moving average on VIX. It's not necessary. And then, of course, you're just looking for those divergences, which I choose to highlight with, a little trend line. But again, up to you how you want to deal with that. And yeah, that's basically how the tool works. All right, that should be good for now. Serial Trader signing off.